myself Vaibhav. In today's session of Visual JForex, we will be continuing our work with the indicator Kairi relative index. We will see how we can design and develop the algorithm using this indicator. So let us click to the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the prior session, the instrument subscription was done using these if-else blocks. Along with that, the position amount was defined at 0. Then I got these 4 carry blocks of the hourly time period and different lookback period 1, 2, 3, and 8, which we will be using to compare the output value for this indicator, and accordingly we will be looking at the trading opportunity, for which I will explain to you the logic soon. And to look at the price action immediately prior to the execution of the trade, we are also relying on this historical candle data, and to pinpoint the exact entry points, these 10-second candles will be used. And here this value was defined for 10 pips using the default instrument pip size and a new variable with the value of 10. Now in today's session, the focus is going to be on the buy side of the equation, how we can go about the trade when we are looking for the buy. So this is the Euro USD chart, and it is of the hourly time period, and I have plotted this Kairi relative index on the lower side. And what we are looking at for the execution of the trade is divergence. When we see that the price action has been downward and this Kairi relative index has been in negative territory, and in such instance, when we see that the Kairi relative index starts to rise, and this is the second attempt, and it is starting to rise from the higher ground compared to the prior instance, something like this, where this uptick is happening above the prior reversal. But at the same time, we will also be looking at the candle closing levels, and we want it to be lower, so there should be divergence, and I think this time around that condition is not going to be fulfilled. So whenever that happens, when we have the divergence taking place, when the price action is making the lower low, whereas the KRE relative index is making a higher low, we want to go for the trade. So we start adding the building blocks of this algorithm, and here this calculation was done, and then we will also have to look at the actual price difference between the closing and the opening value for last historical candle of the hourly time period. And for that, I will have to take mathematical component calculation expression, and we have to take candle 20's close and open value, and of course the closing value should be higher than the opening value. This difference between the two values should be more than 10 pips. A1 minus A2 . Okay, and after this we can now start adding the if else blocks. I will bring in the multiple action first the trading component. Now it is under logical, and here I will join it for the time being, but later on we will have to disconnect it. Okay, logic is fairly simple. We want these Chiari relative index values to be in the negative territory, and all these values starting from output 13 to output 19, all these values need to be negative. So we will make sure that is the case by getting these values and drawing the comparison. Second input is going to be common 0. First input less than second input. Okay. And then we will have to compare these values of output 13, 17 and 18 with each other. We want the last hour's Chiari relative index value to be greater than the penultimate candle's value, and at the same time this output 17 should have been lower than the output 18. So first we will compare this to I will have to take a couple of blocks more. First input less than no, not this time. It should be first input greater than second input. And output 17 needs to be less than output 18. And output 17 needs to be greater than output 19. So that will mean that the higher low is being formed on the plotting of Chiari. This should be first input greater than second input. Okay, so we have defined these conditions for the Chiari relative index values using these 7 if blocks, and now we turn our attention to the price action where we need last hour's closing value to be more than its opening value by more than 10 pips. So for that, this difference needs to be greater than minimum difference. And after that, we also have to make sure that the candle 21's close was below candle 22's close. As here on the price action front, we want the lower low, and for that we need to compare candle 21 candle close with candle 22nd candle close. First input less than second input. Okay, so far so good. And with this, I think we are almost done with the addition of the conditions for the execution of the buy trade. And we can now shift our attention to the pinpointing of the exact entry, and that is of course going to be the last hour's closing value. Whenever price starts to rise above that, we will be looking to place the order. Okay, so here we are going to need two more it blocks, and for these two blocks the second input will be common, which is going to be candle 20 candle close. Okay, first input. Now we have to take candle 23 and candle 24 closing value as the second input respectively in both these blocks. And this should be first input greater than second input. And candle 24 candle close should have been below the candle 20 candle close. Okay, now is the time to bring in the trading block. We can use any of these pending open or open at market to keep it simple. This time around I will be working with the open at market, but we'll keep the stop loss and target price dynamic depending on this price difference. So whatever is the price difference, I think even 100% of it or 150% of it can be kept as a stop loss, and twice of it means twice of the stop loss should be considered the target price. So here first input, since this was candle 20 candle close, we need first input to be less in this case. So I had mistakenly joined greater. That shouldn't be the case. Okay, and in this instance, first input needs to be greater, and then we have to turn our attention to the defining of these input parameters. But before we do that, let us arrange these all the conditions which we have defined so far in a proper manner. Okay, these two if blocks, and then we will see the input parameters for the open market block. We have used 11 if blocks to get the entry point right. This is going to be buy order Euro USD as it is. Default trade amount I will change to 0.1 million. As I have said many times in prior sessions also, it will be defined as per your equity. Page 2 pips is good enough. Stop loss and take profit we will make it dynamic, and that calculation is going to be fairly simple. All we are going to do is take 100% of this APD value as the stop loss. So we don't want the price to dip below the last hour's opening value. So here we will need mathematical components, calculation expression. And we will need to multiply this difference by 10 raised to the power 4, which is going to be our variable to convert these decimal values to integer value. But the pip value will remain the same. So I will create a new variable. We'll name it ECF. Okay. And this is going to be our stop loss A1 multiplied by A2. And twice of this will be our take profit. Stop loss, I will create the variable here. And again we create a new variable with the start value of 2 named target price TPC. Same thing, A1 into A2. And its value will be derived from this calculation. Okay. So we have made the stop loss and target price dynamic. Depending on the price action, this will be determined automatically. With this, our buy side setup is complete. I will color code this to make sure that algorithm iteration flow is going through. Yes, everything looks good. So with this, the session is also coming to an end. In next session, we will be continuing our work, and the focus is of course going to be on the sell side conditions and how we can go about the defining of those conditions. And I will be trying to explain to you in a very simple manner. So thank you all for joining in. I hope you have been able to understand the development so far. And for more updates, you can subscribe to the Dukascopy webinar channel. See you next time. Till then, goodbye.